Great time to get in Pankaj Murarka, CIO of Renaissance Investment Managers on the show. Pankaj, great having you. Thanks for joining in on an important day, I might add. Would you reckon that the budget could be a make or break event, or you reckon that it will not have too much of an impact on the market at large, say for specific stocks or specific sectors?
Morning, Neeraj. Always a pleasure talking to you. I think, Neeraj, I would like to think about this budget as the 11th budget of a government which has been in continuity. Having said that, I think obviously this budget is coming on back of electoral setback. So it's a budget from a leading party with 250 seats. In pre-election, what one would have expected is a budget from a government with 350 seats. In either case, I think the budget will be very different. So I think this will be a please-all budget kind of a thing where, because it's coming on back of electoral setback, it will be a budget which will try to appease or address concerns which have come out to the fore in the election outcomes and make sure that every section of the society gets something out of it. Having said that, while achieving those objectives, I think the budget will be a very balanced budget, and it will continue to focus on its thrust on investments and capital expenditure, and government will maintain the overall fiscal prudence targets in terms of fiscal consolidation. So I would think it's a budget which is the 11th budget of a government in continuity, and in which way I don't think so it will be a make or break in terms of markets. And I still go into this budget with a very positive bias in terms of outlook for growth and budgetary allocation and thrust on investments and growth.
Pankaj, we've had a good run even ahead of the budget this time, right? The Nifty's up 5% in the last couple of weeks. Do you feel a good budget is already factored into the markets? And some believe and argue that the markets do look expensive. Do you anticipate a big correction around the corner, be it because of budget or any other reason outside the budget?
Well, I take your point that India is an expensive market. We are the most expensive equity market in the world. But given the context that we are the highest earnings growth and the highest economic growth or GDP growth in the world, and probably one of the highest quality of earnings in the world, India will remain expensive. So it's unlikely that Indian markets on aggregate will trade at valuations which will be lower than global markets. Indian markets will command a premium. So to that extent, given the fact that we've had an extended rally in the last few months and probably over the last 18 months, market is prone or susceptible to a round of profit taking or a correction. But my view still remains that for investors who have a time horizon which is 1 year and above, any correction or any dips in the markets will be an opportunity to buy. So I will not be too concerned about short-term corrections or dips in the market, because from our perspective, we invest from a slightly more longer-term horizons. But a round of profit taking is possible because markets have had an extended rally. But I don't see a very sharp correction or a deep sell-off in the markets in either ways.
Hi, good morning. Tamanna here. Just wanted to get your take on rail stocks which are buzzing this morning. Let's pull up an Ircon. Let's look at what a RailTel is doing. All of them ahead of an expectation of a significant bump up in allocation in the rail budget, which of course sits within the larger union budget. Do you think that there is, a constructive view on the whole rail pack despite the run-up that has already come through?
Morning, Tamanna. I certainly think so. There's a great thrust from the one paradigm shift that I've seen, or I think all of us have observed in the approach to government in terms of steering or driving growth in the economy was during the middle of COVID crisis, where the government realized that they need to significantly accelerate investments, and that's the only way to build growth. And in context of that, if you see, over the last 4 years, India's capital expenditure or the central government capital expenditure has actually doubled from about 5 lakh crores during COVID. We are about 10 lakh crores or 11 lakh crores as projected in the interim budget. So obviously, across the board, there's been a significant momentum or significantly higher allocation towards investments into different segments of the economy, be it roads, ports. Railways has been one of the big segments in that context. Railway capex has actually gone 3.5 times in FY20. When we hit COVID, central government's railway capex outflow was about 70,000 crores, and this year we'll be clocking something around 250,000 crores. It's already growing at double digits as projected in the interim budget. So I certainly think there's a lot of momentum in the railway investments from the government side, and it ought to be because we are the second largest railway network in the world, and it's a network which requires massive investments across safety, infrastructure, passenger facilities, and so on and so forth. And we really need to build that. So I certainly think so, meaning railway, all the stocks within the sector have been one of the best performing stocks over the last year and a half. So obviously valuations in the sector have now caught up with the growth momentum and are rich. So one should, meaning be careful in terms of picking the right stocks. But I certainly see the momentum in railway investments and strong momentum for these rail companies continuing, undoubtedly.
The big focus has been that India has to reduce carbon footprint, the trust on green, clean energy. Now, how does an investor play this theme? Today, of course, stocks like Adani Green, Borosil Renewable, largely anything in the renewable space is doing quite well. But is that a mature way of investing in this sector or in this piece of clean and green energy?
So if you look at the whole value chain, there are 3 or 4 players in the value chain. Clearly, one of the players where the value chain starts from is the utilities who are setting up or who are investing into creating these clean energy facilities, be it a solar or a wind or green hydrogen and blue hydrogen and things like that. So clearly the utilities is a starting point, and then you drill down to EPC companies or project companies which are executing these projects. And there, apart from the companies executing the projects directly on the contractual basis, there are other companies which are providing technology to these companies or services to those companies. And then eventually there is a huge transformation that or investment that needs to be made in the grid as well, because the grid for renewables has to be very different in terms of its ability and context. So I think across value chain, we have enough plays, and I'm sure over a period of time, we'll have more companies, meaning I know that there are at least a handful of companies which are lined up for IPOs over the next 6 months across solar, wind, renewables, and so on and so forth. So I think within the listed space as well, there are a fair number of opportunities, and I think that will only expand as companies grow their business and more companies become public in that sense.
Okay. Pankaj, just one quick thing on IT. And I don't quite remember what your take was 3 months ago, but the sector seems to have come out of nowhere and become a darling. The numbers mix bag, the commentary mix bag too. Are you constructive here from the current point of time?
Well, Neeraj, I've been positive on IT as a sector for almost now last 9 months, and obviously the sector did not perform for the last 8 odd months or so on. But we continue to remain extremely positive on IT sector because we think the worst in terms of the slowdown in US spending on IT over the last 2 years is clearly behind us. We see strong signs of things stabilizing, and more importantly, as rate cuts start setting in US, we see clients coming back and spending in US. So we think IT spends in US will start picking up from the second half of this year. And more importantly, from a slightly more medium term to longer term, I am of the firm opinion that the implementation of AI across corporates and consumers over the next decade will bring in or will usher in one of the biggest IT wave that we haven't seen. So my view is that this spending cycle in IT over the medium term as AI-driven projects accelerate will be much bigger than the biggest wave that we have seen so far, which was the internet wave in the mid-90s and late 90s. I think probably we are in for a much, much bigger and a very stronger IT spend cycle over the next decade.
Right. Pankaj, please complete what you were saying.
No, so I was just saying that I'm a very strong bull on IT, and I think it's a story for the decade.
And it has been, even historically, the last decade, in some ways, IT stocks have actually not disappointed investors. One space that became the biggest bet when we talked about Modi, the Modi government, there were Modi stocks, anything to do with PSU caught the fancy of investors. PSU mutual funds have outperformed by over 100%. But with the increase in market cap in the recent past, some of these counters are not investable anymore. Would you agree with me, or would you continue to play the PSU theme for the next year or two?
No, we still have ownership in PSU. So one, clearly, the kind of stellar performance we've seen in PSU stocks is also coming on back of the fact that these stocks had a a decade of underperformance in the last decade. And at the starting point of this rally, these stocks were extremely underowned, and in terms of valuations, they were extremely cheap. You had a State Bank which was trading at 4 PE, and a lot of you had companies like REC and PFC which were trading at 0.4 times their 40% discount to their book value or their net worth, and which is where meaning what we've seen is a mean reversion where these stocks are reverting back to their mean valuations, longer term mean valuations. We still believe that these valuations, while stocks have done pretty well, but valuations are still below their long-term averages. So we still believe that especially in case of financials, when we talk about PFC or REC or State Bank, we still think that there is a valuation upside in those stocks apart from earnings growth that these companies will deliver. And obviously, so we still continue to own PSUs, and we are a believer in the whole PSU rally in that sense. And I think our view is that this whole PSU rally will continue.
PSU rally will continue, says Pankaj Murarka. That's an important point because, this whole narrative of that the PSU story is oversold, overbought. We'll have to see if that really plays out, and that's an interesting call right there. Rajesh, exports, Borosil, Renew. Look at some of the stocks that are doing really well this morning in the pre-open session. Sorry, the pre-budget session.